Hello everyone and welcome back to Unocoin's YouTube channel. So today we are going to tell you about one of the most essential prerequisites of entering the crypto market, and that is support and resistance lines. So these are basic lines on a trading chart that help you predict the upcoming trends for a particular asset. Now, crypto analysts often cite two key markers when predicting whether the price of a given coin or token is set to rise or fall. These markers are psychological support or resistance lines, price points that offer a sort of floor or ceiling for the prices. For instance, an analyst might say that Bitcoin's price is struggling to break through a $20,000 resistance layer, meaning that the investors are showing a reluctance to buy Bitcoin as it nears $20,000. On the other side, traders may say that there's support around a price point or a range for an asset, meaning that the price tends to bounce back up whenever the asset nears the price because investors now see it as a bargain and will swoop in to buy it, stopping further drop in prices as well. In simplest terms, resistance is where the market stops buying because it deems the asset to be too expensive, while support is the price where the market sees the asset as a bargain and will buy it. Now, how to draw support and resistance? The simplest tool is to draw a horizontal line on a coin's charted movements to look at the peaks and the troughs, deducing from these events the prices at which traders are likely to buy the cryptocurrency and pump the price or sell the cryptocurrency and sink the price. Traders also use simple moving average trend lines to spot support and resistance level, using for instance 200-day and 50-day moving average lines to identify points of support and resistance. So guys, if you liked our video, do hit the like button and subscribe to Unocoin's channel. And for more information on this, check out our blog from the link in the description below. See you in the next video.